Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to look at some nice trades that unfolded on the Nifty, the 3-minute Nifty, which is one of the main index markets over there in India. But as usual, let's review our MTPredictor video and remind you that all all examples in this video should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and training purposes only. Remind you, there's a risk of loss in trading and investing. We'll be actually looking at a losing trade in today's video. It's always important to show losses, and as such all traders must know and understand, but more importantly accept that losses can and do unfold. Right, let's have a look at a 3-minute chart of the Nifty. It's great that there's so many customers completely worldwide using MTPredictor now, so not only do I show examples on the US markets, European markets, but also on the local Indian markets as well. Right, let's have a look at a 3-minute chart of the Nifty. This is what's unfolding today, which is June the 8th. You can see we had a couple of history triangles here. Now I want to just remind you that just because there's a history triangle here, it does not mean to say it's a losing trade. For example, if I right mouse click over this red sell bar, do the analysis, you can see this gave a TS2 sell that would have been taken in for a short trade, then would have been stopped out. Remember, we use position sizing to keep your initial risk small and under control. This would have been a losing trade, so this would be what we call a 1R loss. There's also another history triangle here. If I right mouse click over this, you can see that at the time this was actually an ABC correction and a TS3 sell. This one came down to the first profit target, which so far looked to be pretty much the low of the day. But more importantly, it was for a nice 5.6R profit. In other words, the profit was 5.5 times the initial risk. But the important point is that this history triangle was actually a winning trade. You can see this more clearly if I use our training mode, and if I jump back to this bar here, you can see that's what it looked like at the time. So it would have been a perfectly valid TS3 sell on a red MTP trend. Right mouse click, do the analysis. You can see that would have been your trade setup at the time. If I turn training mode off and reset the chart, rescale the chart, you can see that's exactly the same as we saw earlier. So just because there's a history triangle there does not mean to say it was a losing trade. You have to place the analysis on to see how it could have unfolded. Right, let's put this in the context of the large degree trend as we normally do. Remember, we look for a large degree trend on the higher time frame, which is normally between 3 and 5 time frames higher. So as this is a 3-minute chart, we go out to the 15-minute chart. That's the next logical time frame higher. If you're, say, trading 15-minute Forex, you'd go out to the hourly. If you're trading, say, daily stocks, you'd go out to the weekly. So how do we gauge the large degree trend? Well, we look for previous major swings, and highs and lows. You can see here the market came down to this low, and actually if I right mouse click here, do interwave intermediate, you can see this was actually a 5-wave sequence with the previous low down there right at the minimum wave 5 WPT, but that's probably the topic for another video. What I want to look at here is, can you see how this was a fairly obvious major high? So I right mouse click here, do decision point, and this gives you an area on your chart. But remember, these are on your chart in advance. So literally this decision point resistance area would have been on the Nifty literally for the last couple of days. In other words, before today opened, before yesterday opened, even before the day before opened, this would have been here as a major resistance area. But can you see what the Nifty did on this 15-minute chart? It went up to this high, nipped just beyond it, but then snapped back down in again and then started to come down. In other words, this was providing meaningful resistance. The market made a meaningful reversal at this resistance area. So what does that mean on the time frame you're trading? Well, if you come down to the time frame you're trading, you can then see that that would then indicate the large degree trend was down. The previous day, which was yesterday, this would have actually provided some confusion, because you can see you'd be in the area where market was likely to make a reversal, but our MTP trend was blue. As I teach, when there's confusion, you should stand aside and not trade at all. So in other words, you'd probably be worried about this TS4 sell setup because the DP trend and the DP resistance and the MTP trend were in opposition, so that wouldn't be good. But look how different it is today. Here the market is drifting off nicely, After our 15-minute high, in other words, it was providing resistance, the large degree trend was down, our MTP trend turned red, and as such, they both were telling you the same thing, therefore the large degree trend was down, and the picture was a lot clearer. This TS3 buy setup you'd be avoiding. Why? Because as we've already said, the large degree trend was down off our 15-minute resistance, and also our MTP trend was red. So the only two setups you'll be looking at today on the Nifty were this first trade setup here, which, as I've already said, would actually be a losing trade. Remember, losses can and will and always will unfold. It's important to show losing trades, and it's important to understand that there always will be losses. But because we use position sizing, this loss would have been kept small. It would have been kept small at one risk unit, or a 1R loss. We then had another sell setup here. If I place the analysis on, this one then came down, and looks to be a very nice trade so far. It looks like this TS3 sell setup was on the very bar of the high of the day, and looks like this profit target here is pretty much the very bar of the low of the day so far. Obviously the market's still open at the moment, but so far that looks to be a very good trade. So do you see how important position sizing here is? Because rather than just saying one losing trade and one profitable trade, we actually look at this as one risk unit loss and then a plus 5.6R profit here. So plus 5.6 minus 1, i.e. the 1R loss, is plus 4.6R profit overall. And that's why it's so important using position sizing, and that's why it's at the core of MTPredictor, in that we're looking for keeping the losses small when they come through, and they will, which is what happened here. But we're looking to have the profits large, but not just large in dollars or rupees in this case, but large in relation to the initial risk. And that's why we have the R here to show you what the profit is, not just in the currency, but in risk units in relation to the initial risk. So as you can see, a very good trade today, or a very good day for MTPredictor today, where the large degree trend was clearly down off our 15-minute DP resistance and also our MTP trend, and with a couple of trades here on the Nifty, first a loss and the second one an absolutely amazing trade that resulted in a plus 5.6R profit. So a very good day for MTPredictor 8 on the Nifty today, which is currently unfolding and is June the 8th.